Okay, we're back recording again from the break. So here's a bottom from the S&Ps, and this is from 1998. Now, this doesn't look like much of a down move, but this was actually 23% that occurred to the downside in like 2.5 months. It was pretty dramatic at the time. And you can see that at A, we begin the down move with large volume coming in. There's some weakness coming in right there as the market moves down. And certainly B shows supply as well. At C, we get the largest volume on the chart. And by this point, you would have to be thinking to yourself, I'm seeing swelling of volume coming in here. And clearly over the entire down move to E, you've clearly got that swelling of volume. And if you do the little trick of just eyeballing the average, it's usually about twice the average volume. And that is just an easy way to understand that this is a lot of activity coming into the market, and potentially the spot where a bottom may come in. Okay. So on C, we have a big widespread down bar, but the market closes off the lows, and we've got very high volume. So we know that there was some buying coming in. D, it looks like it's less volume, but it really isn't. That's quite a bit of volume to the upside. We don't come down at all. We basically open the next week and go up from there on strong volume. So that indicates, that in itself is a little bit of a change of behavior, but it indicates that there is buying coming into the market. Market rallies up and then comes back down to E, and we see volume is less than C, certainly. So selling is dried up quite a bit. And if we were watching this real time, when we were underneath C, I would almost guarantee that the volume would have been fairly low, and all that volume came in on the buy side as the market moved up. And this is a weekly spring here, another spring. Okay, so let's drill into this a little bit on the daily. It's the same period here, A and C. I didn't do that very well, did I? Sorry about that. This C and E is actually A and C here. This would be C and E. I'm a little bit better than that on following charts. But okay, so for now we come down. We see some acceleration. We certainly see that we're oversold on the daily, and we also see that swelling of volume coming in here. Notice that A is this volume here, and the very next volume, that very next bar is strong and goes up, and that is this volume. And I highlight that as B here, okay? And that's buying coming in. That's strong buying coming into the market. So for the first time in this down wave, we see some strength coming in. We rally up a little bit, break the downtrend channel. If we extended it, this downtrend channel is broken. That's a sign of strength. We come back down into here, and then we come back down to this same level and spring. So here's a great spot to buy. Notice too, I've highlighted these little dips down as AC. Okay, we dip down, volume picks up a little bit. It pushes the market up. We come back down. Volume picks up, pushes the market up. We come back down. Volume picks up a little bit, not as much as before. We don't really push up. Instead, we're coming down. So, but this whole area in here is accumulation. This is classic accumulation where we keep dipping down into the initial buy spot. Here and here and here and here, and then flush it out the bottom for any premature longs. Get rid of them before the market starts to drive up. But this is classic accumulation in here. Keep dipping into the initial buy spot. We see good volume coming off the bottom, and we see very good volume coming in here at D. Okay, and so that gives us the sense that this is about to push on up and go higher. So that was the 1998 bottom. Again, mature trend, oversold, a little bit of acceleration, swelling of the volume, buying strength in price bars come in. In this case, we see some accumulation. That's pretty obvious here. It's not always obvious. A lot of times it's not obvious at all. And then we get a spring, which is a sign of strength in its own right, but we want to see that sign of strength continue almost immediately, and that's exactly what we get here on D. Okay. Why do I call it AC? Just accumulation, just a... thanks for coming, Natasha. Natasha says she has to go. Okay, so let's look at now the 2011 bottom that occurred when Moody's and Standard & Poor's suddenly got religion and said that, and downgraded the U.S. credit, the U.S. bonds and government credit, right? They weren't doing it at all for the credit default swaps. They gave them AAA ratings, but they gave the U.S. long-term bonds and what have you a downgrade. So that shook the market out quite a bit. Look familiar to you? Does this look like the 1998? This looks similar to 1998? You bet it does. Okay, these, as I said before, these patterns are trader behavior. So I'll look at this both on the weekly and the daily. On A here on the weekly, we see strong volume coming down, so we know that this is negativity coming into the market. But look at what happens on B. You would never see this behavior if on B, on higher volume than A, and the market closes firm like this. You'd never see that kind of buying if this market were truly weak. Okay, we rally up a little bit. We don't have volume following through too much here. We come back down and then we spring on C, and the volume is substantially less than what we saw earlier, and we get that immediate sign of strength coming up. This tests in here and then continues to go on up. Okay, so let's take a look at the daily here. We don't really get a acceleration in the trend because this was just one big massive move down. So just based on not on the trend channel, but just the move itself, this is oversold in here. It's just way too much to not be oversold. We see the swelling of the volume. We see strong bars start to come in on strong volume in here. And again, we dip into, same as 1998, we dip down into that area of buying, right? And then have one more flush down and spring the market, perfect buy spot here, and the market takes off to the upside. And again, as we dip down and hit those accumulation areas, volume tends to pick up, and that stops the market. We talked about stopping volume. This is a mini little stopping volume, and then that pushes the market up higher. But the same exact stuff as we saw in 1998. I mean, you can't make this stuff up. It's trader behavior. All right, let's take a look at cable here. This is an intraday Forex chart, the pound versus the dollar. Okay, so we have a good down move, which is, I didn't put the numbers in very well, but that was a pretty good move for the pound. We see, and somebody asked, what do you do when you see the market go sideways overnight? Well, here's a good example of that. This market does trade pretty well 24 hours, so you can see it. As we come down, as we get lower down here, we can see that we're not getting, here's another way to measure shortening of the thrust. That's what this blue line in here signifies. We're not getting all the way down to the trend channel. We can draw another trend channel in here. I've got it dotted, right, and it shows. And if we were to draw that little graphic and do this, we would see that the lower we get, the less move down we get. Okay, that's why it looks kind of like a wedge. And we come down to A and we find a bottom here. And we go sideways. We come down to B. A little bit of volume picks up in here, but it doesn't push the market down. That should be your first clue that this market is not going to go any lower. We come down to C, less volume now on B, so clearly no supply. Somebody asked, where's the springboard? Here it is right here on this black arrow. We don't have a nice firm close up here, but we're just sitting right at, kind of right in the middle here. If we were to kind of think of this as a little bit of a trading range in here, we could draw like a little apex in here, a little triangle. There's the springboard right in there. And the market takes off, and we get a strong sign of strength in here as we go up. So again, kind of a mature trend. We don't get seriously overbought, but we do see the shortening of the thrust. We see the volume diminish on the shortening of the thrust. We see some of the price bars show strength in here. We come back, we don't go down any further, and then we get on the springboard and have a spring and then a test of the spring and get on the springboard right after the test and get a sign of strength from there. Okay. Here's crude oil. Boy, do these look similar or what? We saw it on the weekly, we're seeing it on the daily, and now we're seeing it on the, forget what was the cable there, 15-minute chart, and here's 5-minute crude oil. So here we do get oversold, we do accelerate in the trend, we do see shortening of the thrust, we see the volume swell. Here at B, looking at this, you would think that the market was going to go down, and that would have been a fair assumption. But it doesn't do that. It turns right around. Why? Because it's oversold. We wouldn't be able to know that. I mean, I'm not that good of a trader to be able to say, oh yeah, this is going to be fine. If we were watching this, and this is a 5-minute chart, we might try to buy it in here as it's going up. But I'll tell you what, it would be difficult to buy this. At least I think it would be. Nevertheless, we see pretty good volume. I know it's diminishing, but look at the size of the volume compared to the last rally we had in here, or in this move in here. We've got quite a bit of volume on this move up to D. Okay, so we have now a sign of strength coming into the market. And now we look for another opportunity, and we get that higher low in here in the terms of a spring, which occurs on this little bar right here, which is also a spring bar, a springboard bar. Springboards are often bars that are at the end of a sideways line here that go in, that are inside the previous bar or the previous bars. And then we get that nice confirmation that the spring is good. We get another spring over here, but it's getting late in the day. But it continues on. Okay. So we can see this stuff on all different time frames, but it's the mechanics of it and how the structure and the behavioral characteristics work. All right, let's go back to cable again, back to the British pound dollar cross rate, and take a look at this and see what we've got here. Now I'm going to show you how to do this on an intraday basis, multiple time frame basis. So we have here a 60-minute chart, okay? And we can see that on the 60-minute chart, cable is oversold. We came down here at A, pretty strong move down, and we see buying coming in at that level. We push back down. Sometimes this happens in the markets. We had some pretty good volume, but we really don't go much lower here. We rally up, not much volume comes in. We come down to C. Notice how the volume is diminishing as we come down to C. Notice also we have shortening of the thrust in here. As we come down, we're making less and less progress to the downside. Okay? So we have oversold condition, shortening of the thrust, diminishing volume, swelling of the volume where we want to see it. And then we'll take a look at this area from C to D to E. So we're at C now on the hourly chart, and maybe there's something here. We can take a look at the daily and see what we can see. Okay, so this area here corresponds to C on the hourly, and this area up in here corresponds to D, and then this is E. So I'll shift back to the hourly chart just one last time so you can see. Here we have C, D, and then the rally up to E. That's the area we're looking at because we know that we're oversold in here on the hourly chart and we're getting shortening of the thrust. So maybe a trade is there for us. Okay, so down here at C, what do we get? We get the market moves down, kind of holds in here. We see a little buying coming in, not much, but a little bit. And then what happens? We get a spring at 2. Volume is less, which is always a good sign on a spring. Not necessary, but always a good sign. We get what happens next, a sign of strength. There's our sign of strength. Good volume comes in on good price action. And then we come back down sideways here. Volume doesn't really do much. We have a little bit of weakness in here, but the market doesn't seem to respond to it. We rally up a little bit, we come back down, and we get another nice spring in here. And again, not much volume to the downside. And so we want to see more sign of strength come in on that spring, and bang, there it is. So there we are on the Forex markets, showing how this all works. So we've looked at Forex on a 5-minute basis all the way up to a weekly chart, and we see the same kinds of patterns here that we on all of the. It doesn't really matter what market or what chart we're looking at or what time frame we're looking at. We're measuring human behavior is really what we're measuring through the pictogram, if you will, of the charts. And this is what we see over and over and over again. But for these springs to be, understand this well, for these springs to be valid trades in here and in here, we have to have something going on the higher time frame. And we do. We're oversold. We have diminishing volume. We have shortening of the thrust. So on the higher time frame. So now we can go to the lower time frame and make something out of it. Even if you didn't take this spring down here at number 2, clearly we've got a prime opportunity at 5 here, which is D on the hourly. And let's just go back to the hourly here. We're right here. We're right here on the hourly. That's a nice move. And it even gets better. Okay? All right. Did you mean to say oversold rather than overbought in the cable chart? Probably. Yeah, if I said overbought, I'm sorry. I trip myself up a lot on those terms. Apologize for that. Did you use the term diverging volume? No, I don't. Diminishing. I say diminishing. I don't think in terms of divergences. I used to use a fancy indicator that was supposed to pick good divergences when I first started trading, and I found that divergences were the absolute worst type of trade to make, and I quickly got rid of that. And so I don't like even to think in terms of divergences. So I like to see I like to think in terms of diminish. Something is not going well. I did not see the day chart. Sorry, Roy, I don't know. Everybody else seems to. I can see what you see and or what you should be seeing, and everything looks okay. So check your connections, re-log in if you need to. On the 5-minute chart, would you go long at the green arrow to the right of 5? Oh yeah. Just based on the spring and that there is strength in the background? Well, based on the whole thing, Lars, that's what I'm trying to say, is that the hourly is telling us that there is ending action to the down move, and the smaller time frame is showing us strength in the market and now setting up a beautiful spring. I wouldn't hesitate at all to take that. But it's not just because there's strength here and a spring, it's because the hourly chart, I'm right here in the hourly, I've come back into the, I probably didn't explain this as well as I could have. I've come back into the trend channel, the demand line here, and as I come down from this point to this point, I don't increase volume to the downside. So I know that the odds are that this move is now probably over, this down move. Okay? And I go to the smaller time frame chart and I find a choice opportunity, and that's what I trade. That's how you use multiple time frames. Okay. I asked because I would be scared of the ease of movement downwards on the 5-minute. Well, here you mean? But it stops. It stops. And yeah, there's ease of movement down, meaning that the spread increases and the price bar closes on its low. But I don't see volume pick up, and suddenly it just dries up in the next 15 minutes. Why did that happen? Why is it holding? This is a support level. This move up here is much stronger than this move down here. And I'm at support. We're back in here testing this. That's what they're doing. And you can even get more fancy than that. You can say, all right, I've got this support line right here. This was resistance and now it's support. And so the market should hold. I'd take that trade any day of the week. I love this look, this setup right here, because of the behavioral implications. Would I buy at the close of bar 5? Yeah, you buy on the close. I always buy pretty much on the close. I am trying multiple time frame when trading intraday. Which combination would you say is the best? 1 hour 5-minute or 30-minute 5-minute? I like the hourly and the 15-minute and the 3,000 tick. That's what I watch on the S&Ps. Strengthen the 60-minute, supporting the 5-minute. Yeah, you want to be looking at the higher time. You want to be trading the higher time frame. You don't want to be trading the 5-minute chart. You want to be trading the hourly chart, but the hourly is not the chart to be taking because you have larger stops, and the hour the bar takes an hour to complete. So you want to initiate trades off of the 5-minute. You want to coordinate all of that. One of these days I'll do a full-fledged webinar on multiple time frames, but that's a really key thing to do. You really want to start doing that. You don't want to be looking at the 5-minute to figure out where your trades are. You want to be looking at the hourly to figure out your trades. When trading the right edge of the chart, if you have what you suspect looks like a good spring formation, what do you look for next to give confirmation for entry? Well, I take the entry, and then I look for this kind of move up. That's what I want. I take the entry, and it doesn't really matter where you take the entry, anywhere in here, and I'm looking for this. That's my confirmation. Okay? That's my confirmation. And this is good confirmation too. We're moving away from, I go all the way up to this resistance in here, right? This little pocket of resistance, or this little level of resistance. I go from the spring all the way up there. That's pretty cool. Same thing here. Here's some resistance, right? I go from the spring all the way up here and you know, pretty easy shot up. I know that's strength. I expect this resistance to break. It holds here, but I expect it to break later on. And I get a picture perfect opportunity right here. I can't tell you how good that is. I should be trading the Forex markets. Okay, let's move on. Let's take a look at the S&P intraday tops now. We've taken a look at a couple of bottoms. Let's take a look at a couple of tops. Okay, so here we don't get that acceleration of the top up here, right, in this time frame. What we do get, though, is the shortening of the thrust. That's what this indicates. Right? We're moving from here to here, 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 and then suddenly it shortens up. Okay. I'm also seeing, here's where the Weiss wave just is superlative. I can see the wave down is bigger than any, I put these as little a's in here, right? These down waves. It's bigger than any of these. You can see that. But look at the volume. Now, I know it's not huge because you're being dwarfed by these guys over here, right? But compare this volume with all the other pullbacks since this uptrend began. And this is head and shoulders bigger than any of these other pullbacks. I selected this chart specifically for this because it's not, if you look at it first blush, you don't get it, okay? So we have a mature trend. We've gone from about 61 here to 76. That's 15 points. That's pretty good. That's pretty darn good in the S&Ps, especially for this time frame. And we get a sign of weakness. This is a sign of weakness right here, followed by an upthrust. And I'd actually take this first. I don't know why I put the arrow there. I wasn't thinking. I'd actually take the first bar that closes underneath here, and then it comes up and makes you a little uncomfortable, but the market falls down. You could also sell short this bar here too. Let me make sure you see that clearly. This one right here. Why? Because it comes up, tests the level of the upthrust and fails and goes down. That's just showing very weak, a lot of weakness. But you can see the weakness in the price bars here. It can't close above the high over here. We'll call it X. It can't close above X. But the key thing to notice is the wave volume is strong to the downside. We saw that in the other tops on the higher time frames, and here it is in the smaller time frame. And I love the Weiss wave on an intraday chart. Okay. Surely the Weiss wave is bigger because the pullback is longer. Yes, that's right. What causes the pullback to be longer? Selling. The pullbacks were short because the buyers were too eager to get in here, and they were pushing the market up, and there was no selling. Here, the buyers are spent, and the sellers are coming in. Okay. We also have, we talked about this before, some effort to go up, effort versus result. Okay, we have the biggest up wave here, wave volume, but we don't get above the last swing high. So for all that volume, there was selling in that volume. There was a lot of buying, but there was more selling, is the way to understand that. Okay, let's take another look at this. What sticks out at you here? What sticks out at you? What sticks out here on this chart? The first big down wave. Yeah, Edmund, how are you? Good to see you, man. Yep, this should stick out like a sore thumb, showing you the supply coming into the market. So we can look at this. We don't have overbought accelerating trend. What we do have is shortening of the thrust. This is another way to see it. We would expect the market to come up to the top of the trend channel, right? but it doesn't do that. So therefore, the thrust up is shortening. It has to. It has to, okay? Then we get this big down wave, bigger than any of the other waves in here. Okay, you measure it like this. Bigger than any of the other waves, and on substantially large volume. It's the end of the day, which accelerates the volume, but everybody's getting out of this market. If this was bullish, we wouldn't see that. And then we have a weak rally up in the overnight market. Look at this. This is probably around 7:30 in the morning. Okay, the end of the London session, pre-market for the US. And look at the upthrust that occurs. Upthrust after distribution from yesterday. And the sell short is right on that bar there. Picture perfect. Picture perfect. So we don't have the, we've got a mature trend. We've gone a good 10, 12, 15 points here. In the S&Ps, that's a good move. We don't have acceleration. We don't have overbought, but we do have shortening of the thrust. We have a sign of weakness by the size of the down wave and certainly the volume. And then we have weak price bars, and we have an upthrust on a lower high here after a lower low. And then the market just tanks. Okay. What would I say about the little down volume after the big down volume? Just that it's not ready to go down at this point. So the selling had dried up in here. That's all. But it's, you know, this stuff doesn't go away. This kind of thing doesn't go away. And certainly this doesn't take it out. Okay. It's not to say you couldn't buy this in here if you wanted to. Didn't get you much. It was like about a 6 or 7 point move in the overnight market. I mean, it's telling you that it's not going to go down. But what you're looking for after this, you're trying to stay a couple of steps ahead of the market. And what you're looking for after a sign of weakness is a reason to go short. And this is your reason right here. Okay? Is that drawing out the bulls? No, it's just, you know, it's coming back up and testing up in here to see if there's any more demand. There was buying on this coming down because of the high volume, but there was more selling, and so they come up and they test it. The market's always testing to see if there's still demand left at previous levels. Okay, take another look at a bottom here in the S&Ps. Kind of not a strong market down in terms of a accelerating market to the downside, but we do get oversold here. And very similar to what we saw on the cable chart, we have no real sign of strength. This is sort of an unusual one. We're not in a big downtrend move here. We've got some volume coming in here at B. It's hard to tell whether this is buying going on or if there's still selling coming into the market. Probably some buying because of the size of the volume. But it's truthfully, it's unclear here. But we do come underneath, and one of two things is going to start to happen. Either we're going to see the trend start to accelerate to the downside, or we're going to say that we're oversold and the market's going to come back up. Okay? If it's going to accelerate to the downside, it would show me volume coming into the market, but it doesn't do that. We have fairly light volume as we come underneath. So that's one clue that the market is not producing anything down. And then the other clue is that we come up back up above the downtrend channel, and we spring. Okay, so this bar right here would be an okay buy, and mainly because we have diminishing volume here. We don't have much else going on, but we do have diminishing volume. If that's not if that's too aggressive for many people, and it might actually be too aggressive for me, maybe not, but I can understand where people would feel that way. What happens next? Well, what are we looking for? We're looking for a sign of strength, right? And don't we get that? We come all the way back up to the top and we see good volume coming in, better than the downside volume that we've seen. Then the market comes back. We come back underneath this little shelf here and spring on good, solid price action and very low volume. And so there's a good spot to take a trade. This is the best spot on this chart to take the trade. This is aggressive but doable because of the light volume, okay, and the fairly weak trend coming down, the weak downtrend. So you've got to piece some of that stuff together. And some of that comes with experience, you know. You may not see that right away, but I'm trying to give you little clues and hints in here to understand it. How do I draw your channel lines? Do you connect the higher lows and then draw a parallel line? Yes, I use parallels. So when we're drawing a downtrend channel, I draw from the supply line first. So I draw this line first and then connect the intervening low with a parallel line. And that's how you do it. Not much, not rocket science. The shorts are drying up and then price shows the story because the price structure is more important than volume, right? Yes, that's true. That's very true. Very true. Okay, let's take a look at a crude oil bottom. I normally do not see a lot of Forex charts with the Weiss wave. Is that because Forex has tick volume only? Yeah, intraday it's got tick volume, but that's fine. I've read more than one study about tick volume, and I've read them going back into the 1970s and 60s, 70s. In commodities, we didn't have actual volume for a long time. It was always tick volume, and it's correlated. I've seen stuff anywhere from like the high 80s into about 95% correlated with actual volume. And somebody did a study in the last year or two. They do Forex trading exclusively, and they do a lot of research in Forex markets. I forget their names now, but it was published in one of the trade journals, and it was well done. I read the how they did the research, and they took actual volume they have volume from some of the major banks, and they correlated that with tick volume, and they had like in the low 90s. So, you know, that's good. That any correlation that's above 75 is a really good correlation. 1-to-1 means it's equal. You're going to see variation. You're going to see variation between different data feeds on regular volume. So, Forex people get the idea that they don't have volume, but they really do, and it's in the form of tick volume, and it's perfectly good. Okay. It was as high as 90% with the cable. Yeah, it might have very well been as high as 90%. There's some sort of a zigzag function. I don't want to get into that at this point, because that's taking us off topic, and I can tell I'm going to be at least another half hour here. All right, so let's take a look at the bottom in crude. We are close to being oversold here. We're getting down towards the trend channel, the bottom of the trend channel. We certainly see the high volume. We've got shortening of the thrust coming down. Sometimes it's really useful. It's hard to see this, that we have shortening of the thrust here. But one clue is that it pulls off of the trend channel a little bit. Then we get that sign of strength. So look at that. That's a picture perfect sign of strength. I mean, this is textbook. Solid volume coming in. We break the downtrend channel nicely. We get a big wave up. Everybody see that nice big wave up? Much bigger than the earlier waves up, right? Much bigger than the earlier waves up. It's like 3 times the size. That's a sign of strength. So now that that's in the background, we want to trade this. And so here's a nice low volume pullback, great bar to enter on, a nice strong bar to enter on. Here we get a spring. You can either enter it here or on the test of that spring. Either one is fine. So you have a couple of nice opportunities. So one of the things to remember is that when we get a bottom in place, or a top for that matter, that you don't have to get in right at the bottom. You know, this is hard to get in here. We don't have a good entry in here. All you got is shortening of the thrust, and we're near the bottom of the trend channel. We don't have a sign of strength yet. But here we do. And so what? So you missed this, but you got all of this if you held it. Okay? Okay, let's do some bar by bar now. And we'll take a look at also integrating some multiple time frames. Here we're going to work with General Motors, a well-known stock. Okay? This is kind of interesting. Monthly volume is not, I don't know, Wyckoff never looked at volume on the monthly chart. I don't really look at it either, but I put it in here because you can still read it. It's kind of interesting. We come down, we're closing off the bottom, so some buying came in and very high volume has come in here. We make our way down a little bit lower on 2. We see volume diminish. Also notice, because this is a monthly chart, there are waves in here. You know, if you can see in between daily waves and weekly waves. And so what's actually happening in here is shortening of the thrust is occurring on the smaller time frame. We'll probably see that. I forget now what the chart looks like. But on 3, we get strong buying coming up. Not lots of volume, but certainly in price action. We come back down and test that at 4, very low volume. We come up to 5. We rally back up to the top of 3, and typically in one of these bottoms like this, we're not able to go much higher up. We're not doing a V spike reversals, but we're going to build some accumulation potentially. And so we come back down, and notice as we come back down on 6 and 7, volume's not really expanding. Certainly look at 7, it's kind of drying up here. And then at 8, we get a monthly spring here. Dips underneath the lows at 2 and 4, and then closes up. And look at the volume. There's no more supply here. Okay? So this is a monthly chart, a monthly bottom. That could be significant. So let's take a look at this on the weekly chart. And so this corresponds to the why did I do this ABC instead of 1, 2, 3? I'm sorry about that. I didn't do the numbers, but this would correspond to the monthly chart. But again, you can see as we come down to this level, buying comes in on the weekly, right? We see that nice volume coming in. We come back down to B, and we see volume dry up down here. Still, we see buying, and we're holding in here pretty nicely. We get a good rally up, a good sign of strength. This goes up above, I guess this would be 3, and this would be 5 on the monthly chart, to give you a sense. We come up, there was still a lot of buying, but it didn't continue, and we start coming down here. We have some weakness in this bar, and we get some volume coming in. But as we come down, 2 things to note. It's choppy. You know, compare it to this down move here. Here we're moving with ease of movement. Price bars are widespread, wide ranges in here. Here they're kind of overlapping. A lot of, you know, we go down, we go up, we go down, we go up, we go down, right? And there's not a lot of movement down. There's what we would say no ease of movement to the downside. We also notice that volume is diminishing. And we come down here to D, and we have all this volume in here. There's just nothing. There's no volume. And actually we dip underneath on this week, and look at how low the volume is. A holiday, or not a holiday, but summertime. And it's just begging to be bought. Just begging to be bought. Okay, so you can confirm what you think you see on the monthly. And then we come down here to the daily chart, and we see no oversold condition in the trend channel, because remember on the weekly it was sort of a lackluster move down. But on the daily we see that there's shortening of the thrust in here. And this blue line is the monthly support line. And look at what happens on the daily. So there's your buy right there. And if you didn't like that, you wanted a sign of strength, here's our sign of strength. But remember, springs are a sign of strengths in their own right. Up thrusts are signs of weakness in their own right. But we want to see it followed by a sign of strength, and we do. We see good volume coming in, move up. So you got another opportunity to make a purchase in here somewhere. Okay? As we pull back after the sign of a strong sign of strength, and we see volume diminish again. Okay, so that's coordinating on 3 time periods. Let's take a look at cocoa. Again, multiple time frames, and we'll look at the monthly chart first here on cocoa, and we can see A, B, and C. We see the shortening of the thrust. That should be obvious. As we go up to A, we're going to look at A first, then we're going to look at C. So as we go up to A, we see that we're overbought in the trend channel and we've accelerated up. Okay, and we also have a little shortening of the thrust in its own right, because we go from this level to this level to this level. And it gets smaller as we go up, and we also see that diminishing volume. Okay? Same stuff. So here's the same area, A, on the monthly chart, but now we're going to look at A on the weekly chart. Okay? So what do we see? Rally goes up. What's 1? That big sign of weakness, the biggest down bar on this chart. Okay? So that should immediately flag anybody trading this market. We want to now look for an opportunity to go short. So we start to rally up here, and at 2 we get volume coming in underneath here, underneath the resistance. We'll call that X for the moment. And then as we push up above X, what happens to volume? It diminishes. And remember, we're shortening the thrust here. We see shortening of the thrust. We don't know it until 5 occurs. We don't know for sure. But on 5, we get a gap down. Oh my goodness, look at this. Weakness. Talk about weakness. Or 4, rather. And volume picks up, of course, and continues on 5. We come back up at 6 and test. We don't see volume pick up like we did here at 2 coming in this area. Last time we were in this area to the upside, we had this big volume. Now we come up to the same area, same level, and we don't have that kind of volume. So we see the market start to come down, and then we come up here and look at this, no demand after an up thrust. So we have the up thrust and then a no demand test of the up thrust. There's your short. There's your picture perfect short opportunity right there. Okay, for a nice down move in cocoa. But let's go to the daily chart now on this. We can see that it's the same area. We can see that weakness coming in at 1. We can see that big volume building up. We see the volume press up here even more clearly, but then once we get above X, again we'll call it, volume just dries right up. Okay? We see on the last 2 bars here, A and the bar before A, a pickup in volume and no ability to move up. So now we come down on that gap and we see the big sign of, this is a big sign of weakness here in its own right. Okay? And now we come back up here on 5. We have an opportunity to short here. But as I said, the best short is really in here on 7. And so we would drop down to the daily chart and make our short in here. Okay. Again, coordinating these. Okay, back to the monthly chart. Let's take a look at C here, the area of C. Okay, just this is it's going to be this area here. It's upthrusting B. And we're going to take a look at the upthrust of B on the weekly chart. Interestingly, we start up pretty strong here on 1. But look at what happens. We get more volume coming in on 2, and look at the closes. They're poor. So this is trying to break through the supply that we saw over here. Okay? And it's saying that there's still more supply in the market, but they're closing poor. But we're not immediately rejecting, because on 3 we rally back up. So there has to be some, so now we know that we're not going to just die off here. We're going to go a little bit higher. But look at what happens on 4 and the bar after 4. Just the volume is diminished here as we approach resistance. B is resistance, right? This is where supply came in and stopped the market before. So if we don't have good volume coming in on here, we're not going to be able to push through. There's no way. And then look at C. This is the upthrust bar right here. We get a pickup in volume, and we come down, we go back up, and we close poorly. We close underneath B. Okay? And we get immediate gratification on D. We get in the bar after D, we pick up volume all the way down. And then we get a couple of no demand tests up in here, but particularly at G, you have a very nice opportunity to enter on the weekly chart, okay, if you were trading off of the weekly in this market. Let's drop down to the daily chart to see what's happening here. Even more clarity comes into play. We get a good rally up to 1. That looks fine. An okay pullback here. We actually get a spring at 2. That looks good. Okay, that looks good too. And now as we move up to 3, we see volume is not keeping up with the prior rally. We were expanding volume here, and now we're losing volume here. And we get that really wide spread bar in here that we saw on the weekly. There's supply coming in. And then we try to push up here at A, but it's very weak, and we see weak price bars. And look at that beautiful entry right there where the arrow is. And then we start coming down. And there are other opportunities at some of those other points too for going short. So you can see that the we have a lot of different tools that we can use. We've got the Weiss wave, we've got tick charts, we've got individual price bars, we've got multiple time frames, all of which are valid, all of which are very useful. And what we want to always do is keep those principles in the backs of our minds. And what we first started with, the first 2 slides of this presentation, as I said, were the key ideas here of the mature trend, the becoming overbought or oversold, the shortening of the thrust, the diminishing of the volume as the thrust shortens, the weakness in the price bars, the sign of weakness, and then some kind of ending action in terms of spring up thrust or lower high or lower low, and the swelling of the volume coming in at that point. Okay? In summary, could you list the most important signs of strength, weakness that you always look for at bottoms and tops? Yeah, the most important thing is going to be a sign of strength or a sign of weakness. And we see that in terms of wave action, where the opposite wave gets larger and the opposite to the trend, and we see the volume come in on that. Or a spring after we see overbought or oversold. I mean, those are the two. Or upthrust when it's overbought. So, but it's not that, it's not that we can weight these or rate them and say, well, overbought gets a 10 and weakness in the price bars gets a 3. It's not like that at all. You want to piece together a few things. You don't want to just see one thing. So in other words, if you see shortening of the thrust and we're down pretty close to the bottom of the trend channel, and then we see some positive price action and then a spring, that's a good story, so to speak. You want to try to make a story of the principles of of the Wyckoff principles on what's happening in the market at the moment. All right, I want to go through just a couple of the last 3 intermediate bottoms in the S&Ps, because we've had such a strong uptrend. And this is as of, I don't know, it must be today, I think. This is a weekly chart of the S&Ps, a continuation chart. We're just going to look at these last 3 pullbacks in the S&Ps, and it's very similar to what we've been talking about. So here's pullback number 1. This occurred in July, about a year ago, I guess. Okay, we've been on quite a long run here. So we come down in this market, and notice at 1 and 2, we see good price bar action. There's buying coming in here. This is the daily now. We're going to do, looking at multiple time frames. We come down on 3, and it looks like we're going to go down further. You'd have to think that with all that volume, no question about it. But at 4, we see large volume, and we don't go anywhere. We close the same as the day before. And then the next day at 5, pretty similar volume, still pretty high volume. And now we've got this idea that we've got some swelling of volume here, and yet we're oversold in the trend channel. Okay? And then suddenly we spring here at 6. If you're an aggressive player, you can buy that spring. Because we've got enough of the background. We've got oversold conditions, we've got swelling of volume, we've got positive price action, and we have a spring, which is a sign of weakness, a sign of strength in itself. But if you're not comfortable buying that, we come back over here to 8 and look at the low volume. That nice test a few days later of the spring comes back down roughly to the same level. And remember, we said there was buying here and buying here. And look at the buying that's going on here. All those closes are in the same spot just about. That's our buy zone in here. And we come down, we have this low volume test. And there's a great opportunity to go long. And we get a strong sign of strength after that. Okay? So people get excited about some of these pullbacks in the S&Ps, and that's one of the reasons why I wanted to do this last little part. These are not big bottoms, but they may be more in terms of the kinds of things that you all are seeing all the time, rather than maybe these monthly charts and stuff. I don't really know, but I thought I would do a little bit of work on this before we left this seminar. And so here's B. This happened right around the 1st of the year, February or so. And look at what happens. We get oversold in the trend channel. We get the volume picking up in here, right? On bar 4 and the bar before 4, we can't make any further progress down. Then we spring this level from back here, from back in December on 1 and 2, where there was strong buying coming in. So why wouldn't we expect that buying to come back in and occur here too as well? And we get an immediate response off of that spring. It's just picture perfect. Just picture perfect. Okay. And let's take a look now at C here, the last pullback that we had of any note here. And again, on the weekly anyway, and again, it's the same story. We get a down move here. We see the volume pick up. Not much progress after getting oversold here, or close to oversold in the trend channel. And then we spring that level at 1. And that's a great trade right there, to spring that. Because we didn't even go down and spend much time down there. And we rally up, we break the downtrend channel here, the little one. And then 6 and 7, I just highlighted these because it's showing that there is some supply here. Somebody was asking about what about absorption? Well, there was some supply in here. We can see that at 2 and at 3. There was strong move down here, strong volume down. There was some kind of news or something, I guess, in here. And so there's still, that doesn't go away, as I say before. So also there was an upthrust here, that the red line here for that we'll call that X here. That resistance line was an upthrust. So there's a little bit of weakness in here, and the market is going sideways to absorb that, and it does that for a couple of weeks. But these bars here indicate there's still a lot of strength in this market, and that's eventually how it all resolved itself. We get a little shakeout here, which would make anybody pause with that kind of volume, but then it immediately is followed by strength, and the market goes up. Let's see some comment here. 2 key words to remember from today's class: structure and behavior. Yep, absolutely, Rama, absolutely. Okay, so here's the current market. Here's the S&Ps. I use SPY for that, for the S&Ps, and here's the 2007 top. Put that in, and the 09 bottom. And then we had this little top, which wasn't really all that much, but the 2011 hiccup here with the credit default. This was the flash crash here. So what do you think? What do you think about this? Are we seeing any major sign of weakness in here at this point in this market? After going up for 1, 2, 3, 4, 5, going into our 6th year in a row? No, right? Nada. That's right. Nothing. So even if you're a day trader, it helps to look at the higher time frame. Okay? It helps to look at the higher time frame. But let's put some trend channels on here, because you do need to be aware of this. We are seeing some acceleration of the trend. I don't see any sign of weakness in here yet. I don't see any shortening of the thrust or anything else. And we're not overbought per se up in here. We probably still have one more push up to go. But the main money that could have been made out of this uptrend is probably behind us. Not to say that more can't be made to the upside, but we're getting probably close to coming in, at some point in the next few months into a top. So just be aware of that. Be cautious of that, okay? Because we are accelerating. We have one thing coming in here to play, but we don't have enough to certainly not enough to say, okay, let's go short now. All right, so let's just take a look about what we talked about, the structural and behavioral characteristics of tops and bottoms. And as Rama says, this is probably the most important 2 words to remember from this. We've looked at a lot of the major tops and bottoms in recent days. I didn't go all the way back to like 87 and all of that, but there's not a lot of difference. You get the idea. Okay, you get the idea. Springs and upthrusts. If you don't understand this by now, I probably can't help you too much, but these are really crucial. We see these all the time. So what you want to do is integrate the idea of a spring or an upthrust on a smaller time frame with a larger time frame chart and the background or the structure of the market. Okay, even on the same time frame, you want to do that. We talked about upthrust after distribution. We saw a few examples of that. It's not as common as just straight ordinary upthrusts, but upthrusts after distribution kind of have their own melody to them, and they're very important to be aware of. Okay. We talked about some entry ideas. Not a lot. But you know, drop down to the smaller time. The basic idea is to drop down to the smaller time frame and look for some strength to come in. We talked about the use of the Weiss wave. I didn't show you anything on the Weiss wave on the higher time frames, where it is very, very good as well. But where it really excels is the intraday charts, especially when you use them in combination with tick charts. They can certainly be used with a smaller time frame, like a 5-minute chart as well. We looked at multiple time frames. I think this is really important to do. Otherwise, you're just trading random stuff. You know, it's noise more so. You're trading off of one time frame is really not a good idea. Really not recommended. You want to look at multiple time frames as much as you can. We looked at bar by bar reading. That's critical too. Not just the principles that come into play, but you got to be able to see it unfold, and you have to be able to know when the right time is to pounce on your market, so to speak. And then we looked a little bit at current market conditions, including the recent bottoms that occurred in the market. That's the end of this. I just want to say two things to you on this webinar, and that is that my book on trading psychology will be out. They say December 3rd. We'll see. But it's being published by Wiley in the Wiley Trading Series, so I'm pretty honored to be in that. And it's all about cutting-edge psychology. For those of you who don't know, I am a psychologist. I have a doctorate in psychology. I started out as a clinical psychologist and also worked with a fellow who is a sports psychologist and learned that for performance and have equated it to trading. And so I keep up pretty well on all of the current stuff in psychology, all the current research. So there's a book, this book will be out on trading psychology. And there's not too many of them out there, so hopefully this will be helpful to people. The other thing that I want to say is that we haven't been doing much with the website, and there's two reasons for that. One is that I've been working on the book. It took me 2 years to write. It was a serious undertaking, and I couldn't do a whole lot of other things. And so something had to give, and one of those things that gave was the website. And the other thing is that we are now just are about to hire 2 people, a webmaster and a designer, and spend a fair chunk of change on revamping this website. So you're going to see a new look, much better functionality than what's on there now. And once we get it going, which should be early this fall, we'll be doing a lot more posting on the site. I'll do more trading psychology as well, and we'll be doing probably 1 or 2 free webinars a month on top of it all. One on trading psychology, or one on Wyckoff and one on trading psychology. So you'll see us be much more active with a brand new shiny website, which we're really excited about. We think it's going to be a really nice product when we get it done. So the website is still the same. It's tradingpsychologyedge.com. I'd like to be able to Roy says I'd like to be able to join Deep Practice. Yeah, we do this stuff in Deep Practice every week. And so that's a good thing, but it's late for him. So we record everything, and you have the last 4 sessions always available to you. So you can watch it. They run an hour and a half each week on Thursday night. So do I use sports psychology as a perspective a lot? Yes, I do, in the book. If I buy the book, will I sign it? Yes, we will. We're going to set up something for that. On the last chart of the S&Ps with 2 red channels, it looks like the price is not reaching upper trend line of more recent channel. Suggestion of incipient weakness. Let's go back to that. You must mean the blue line here. It's not reaching. Yeah, it would indicate it's not making it all the way up to this trend channel. it's kind of 601 because you are at the top of the other trend channel and you're pushing up through it. So there's still a lot of strength here. It's too early yet to be thinking about this as a lot of weakness coming in. All right, let's see. Any other questions before we close it down? I appreciate everybody coming in and partaking in this webinar. I hope you got something out of it. I think Wyckoff is a brilliant piece of work. You know, his body of work, which is fairly small, is absolutely genius. And people like Tom Williams and David Weiss and a few others who've written about Wyckoff have also made some major contributions. And I hope that you got something out of this. I hope that it will be of help to you. All right, everybody.